Asian stocks are mixed this morning after a US inflation print came in lower than expected. July consumer prices gained 3.2% on an annual basis. That's less than the 3.3% consensus from economists. Prices increased monthly 0.2% as expected. Despite this, the core inflation rate, which strips out food and energy, is still high, standing at 4.7%, still the lowest reading since October 2021 and also slightly lower than expected. But investors are now hoping to see a soft landing in the fight against inflation, meaning a gradual slowdown in growth that would altogether avoid a recession. For more on this now, let's go to Russ Mould, who is AJ Bell Investment Director in London. Thank you for joining us. Russ, so what's the real likelihood of a soft landing at this point? Can we expect an extended pause by the Fed because of this?
Financial markets are doing a very good job in convincing themselves that there may even be no landing at all, let alone a soft landing or a hard landing. They seem increasingly comfortable with the possibility that the Federal Reserve can control inflation on one hand, not tip the US economy into recession on the other. Let's hope so, but I think that after a 15-year experiment with very loose monetary policy, with ongoing very loose fiscal policy, which the Biden government will probably continue to run until next year's election, it seems optimistic, in my opinion, to assume that we will get a very simple, soft solution after a very, very unusual period of history.
Right. And a question on oil prices. We've seen oil rallying in the past few weeks. How much of that is really incorporated in the latest inflation print and how much is still to come? And could this change the inflation picture for the next few months?
I think that's a really, really good question. If you look at the US inflation figures that you discussed, as you said, the headline numbers have come down quite a lot. The core number has come down much less. And that makes me think that it is indeed weakness in oil and gas prices and gasoline prices at the pump that have gone a long way to depressing that the headline figure. The underlying number is still quite strong and quite sticky, particularly in services. And now you're seeing energy, oil and gas prices go back up again. That is one complication for the second half of the year. You also get a softer comparison from a year ago, which will also potentially make the number look more difficult. And also there was an adjustment by the US authorities to medical insurance and how that contributes to inflation. That has gone a long way to depressing the headline number. That will expire, that adjustment, in October. And that will then mean that medical insurance increases will start to show through. So on a mathematical basis, there's a good chance that US inflation starts to re-accelerate in the second half of this year.
Right, and there'll be a problem once again. Russ Mould, thank you very much. And now let's go to other top stories from around the world. The UK economy has posted surprise growth in the second quarter, defying fears of stagnation. GDP expanded by 0.2% in the April to June period, year on year, as consumers have proved more resilient than expected following a series of interest rate hikes. Last week, the Bank of England said it no longer expected the economy to fall into recession this year. The World Bank said a power crisis in Vietnam could cost the small Asian nation $1.4 billion, which amounts to 0.3% of its GDP. The country is facing blackouts and sudden power outages due to an intensely hot spell and unprecedented drought in May and June. The bank has also forecast that Vietnam's economic growth to slow 4.7% this year, down from 8% in 2022. And the parent company of Coach Tapestry says it will buy rival Michael Kors owner Capri Holdings in a deal valued at $8.5 billion. The transaction will see the owner of Coach, Kate Spade, and Stuart Weitzman gain control of Versace, Michael Kors, and Jimmy Choo. Tapestry says the deal will create a powerful global luxury house to challenge larger European rivals for a bigger share of the global luxury market.